Ni hao ma. Just putting ghee in my coffee. Yeah, it's 9 o'clock now, summer hours, and I think it's Monday I start school again. Summer school. So I'm probably going to be up super late again. So I'm just trying to get enough sleep. And then I'm done. And then I got my Harvard Business School stuff starting in October. All right, cool. All righty. You live? Everybody there? All right, 3, 2. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never, ever, 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 ever risk money you cannot afford to lose. Ni hao ma. Hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Welcome to Forex.Today. Did you notice? We have 14,000 subscribers. Thank you very much. 14,000 foreign exchange traders. When I first started trading Forex, I thought I was the only Forex dude in the whole entire world. Couldn't find another one. No books on Forex. Can you imagine that? I had to go to a Barnes & Noble. They didn't have anything there. You say, well, what about Amazon? Yeah, it was a startup that no one had heard of. And all they sold were books. It was an online bookstore, but no one ever really used it. So, all they had was Forex Made Easy. So then I went to Barnes and Noble, and all they had was Forex Made Easy. And then I went to Stanford University's bookstore, and I bought some finance books that had some topics on foreign exchange, and that was it. That was the world of Forex. Amazing, huh? Very cool. So it's really nice to have you here. I love being surrounded by talented, successful, driven, like-minded people. So thank you for being part of the community. And if being a member of this community is beneficial to you, would you please thank our sponsor by visiting TradersWay.com and opening up a demo account? Pay it back. Say, hey, Traders Way, thank you very much. We appreciate it. Oh, right on, Javier. Of course, there's some 12-year-old kid that plays Fortnite or Minecraft and gets 14,000 people a day subscribing to his channel. So it's kind of a weird world, isn't it? I thought maybe if I start wearing a bikini, views will go up. Because apparently bikinis get a lot of viewers as well as gamers. Yeah. Oh my God, yeah. All right. So here's where we left off yesterday. 5-minute chart, pound dollar. Okay, let me get my drawer out. Okay. We were playing the double top up here, do you remember? And what was the trade plan? Down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 up, sell, down, down, down. Do you guys remember that? It's very complicated stuff, right? Oh, I know I'm being facetious, but that is what we talked about. And the most important part isn't your ability to just trade some very basic price action, is that on Friday or Thursday of last week, you had this planned at that price. Now, maybe you didn't know it was a double top, but you knew that was the exact price. And I said, that is the moneymaker. Knowing that on Thursday and Friday, waiting all Monday, and then suddenly on Tuesday, you're like, there it is. There it is. That's what I've been waiting for. That's what I have been waiting for because I am the boss. I don't chase price. Price chases me. How many people are starting to really get that concept that you need to be looking right on your charts, not just left? Doesn't mean you can't look left, but you need to be, let's say, a day or two in front of the market at all times. How many people are starting to get that concept? Isn't that neat? Okay. And what it does is it makes all the other strategies, whether you're, from scalping to position trading and everything in between, it clarifies everything. It sets everything up properly. So anyways, let's go back. I don't think I could even get back into yesterday. Well, let's try it. I gotta move that for a little more real estate. Got to turn that off. Give it a couple of clicks in. Okay, there we are. Another click in. There's the shoulder. All right, so these are 5-minute candles, right? Okay, this is where we started the whole process yesterday. Down, 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 up, up. Peter, you're predicting the future based on your fundamental and technical analysis. That's what looking right is. Okay. Down, 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 up, up. Down, 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 up, up. This is where I left you guys yesterday. We were stuck down here. If you recall, that was the bottom. That was one standard deviation from our mean on a lousy, stinky, no good 5-minute chart. Anyways, up, up. Okay, down, 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 up, up. Okay, now in here, there's lots of little ones. Down, 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 up, up, down, 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 up, up, down, 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 up, up. Okay. Okay, but whatever. So this might have been one just down, 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 up, up. You're going to take it because you don't know that it's going to fail, right? Down, up, up, up. Now, you may also notice that this is pretty much the London close. Okay? So you can anticipate this being a problem. Okay? Based on the clock. But maybe if we back out from a 5-minute to a 15-minute chart. Oh, wait, I got to turn everything back on now. Okay, you can see right in here, we just get locked up on what? Pretty logical, huh? So whatever. Okay. And look how long that's lasted. Hours and 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 hours, 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 and hours. Should have just taken profit and walked away. Cool. Right on. Very neat. Neat stuff. Cool beans. Okay. All right. Cool. Let's take a look at what we got. Talk to me, Goose. That's a long ways down. But we also have formed this. There's your head and shoulders. Okay? We don't know if it's going to fulfill, but we know what we know, and we know that we know it. Okay. There's a decline. Cool. This is the price bulls were supposed to buy Sunday morning. Sorry, Sunday afternoon. Not Monday. If you're in New York, this is Sunday. Okay? Then we get to this price, and we knew all of last week, or certainly on Thursday and Friday, this is what we're talking about on pound dollar, that if you were a bear, you're going to sell this. So it looks like bears are trying to do what they're trying to do. You don't know yet, but here's the thing. If you are a bull, and let me get the drawing tool a little better. If you are a bull, you were supposed to buy it here, and you knew this last week. So if you're a bull, you're a bull, and you bought that, and that's that. Done. Enough said. Like, literally done before Monday, right? 5 o'clock on Sunday afternoon, or 6 o'clock on Sunday afternoon, you buy it, and you're done. Okay? Now, if you are a bear, you already knew what you wanted to do. You wanted to sell. Okay? Right there. If you don't know these things, you don't know how to trade with pivot points, which means you are not using one of the most important leading indicators, if not the most important leading indicator we have. So that's your fault. So if you're a bear, that is clearly 1,000% over what you're looking for. Okay? And you are now done. So here's the thing. Amateurs are still getting into trades inside this zone, but that's where pigs live. What happens to pigs? Huh? What happens to pigs? What happened to this pig? Blah! Blah! What happened to this pig, huh? What happened to him? He had a bad day. Because he's a pig. And pigs get slaughtered. Now, if you are a bull, you're probably getting knocked out right now. Good. That's a good trade, though. You have to understand that. Okay? If you're getting knocked out as a bull here, that's a good trade. Getting knocked out is not a bad trade. You need to get yourself, or even better, your clients, into opportunities, ideally with low risk and high reward. That's your job. You're looking for opportunities. Boy, that's an opportunity. Now, it may not be a great opportunity because we can see what's going on here, but there's two chances here for a bull. This is consolidating this way, or it will consolidate up here or something, right? Or a third way of looking at it is it could do this. Okay? But if bears are going to take charge, then we're going to be down here. And what happens to bulls? Well, they get knocked out at break even or a small loss. Who cares? Who cares? Irrelevant. Okay? So we know one of these teams, right, is going to win. If bears are going to take it down, great. We don't know if they are, but we know if they're going to do it, this is the trade. That's the cool thing. You don't know the outcome, but if you're a bear, you have to take this. The whole idea of a head and shoulders, lower low, lower high, roll reversal off the M3, like, what are you waiting for if you're a bear? What is it that you're looking for? I can't imagine you're looking for anything more than that. Okay? So if you're a bear, you take that shot up here, and I don't know if there's any other swing trade. That's so obvious that it's like, I don't know, that's your trade for the week. That is. I can't imagine you have a different trade than that as a bear. And as a bull, you understand you don't like this down here. You don't like it, but it is a setup, and you take it and you jam your stop close because you don't like it. You see it higher risk than you prefer, and you're still back here. You're still here, okay? So it's not good, but maybe you still have a stop 20 pips away or something. And right now you're on your hands and knees and praying that it does this. Now, it doesn't hurt. You can totally pray, okay? It's not a strategy, but look, it doesn't hurt. So right now you're like, please go up, okay? But if it goes down, yeah, at least you had an opportunity. Okay? Thank you, Hope. Because what you want, guys, you know, let's say 3,000 times a year. And you might say, well, Wayne, that sounds like a lot. Well, that means you don't trade enough. You like make one trade a day and you hope you're going to be profitable. You're loading the boat on a lot of risk there. Anyways, let's say you're making 3,000 opportunities, right? And do you care if 2,000 of them break even? Not if the other 1,000's winners, right? So what you want is as many opportunities to shoot at the net. Right? You can't score unless you shoot. So I look at this and you're like, well, it is an M2, so if it starts going up, boom, it starts going up, enter the trade, drop a stop, and take a walk. You're done. It's not the world's greatest trade, you know that, but it is a valid trade. Okay? This is clearly a setup. And bears are clearly going to set this up, and one of those is going to be right. Okay? Bulls buy here, bears sell here, pigs get slaughtered. Cool. Okay? There's a little bit of hope here for the bulls because we're still at the M2. We're still at price support. Okay? But we're also 68% oversold on this time frame if you're a bull. And right now, the slope, right, M, which is rise over run, right, is bullish. So there's a little bit of statistical hope here. It's statistically oversold in on the 4-hour chart based on the data set you're measuring having an upward slope. It's one standard deviation from the average price over this time period, which is about a month or so. Okay? So you're like, well, if it don't go up here, I'm out. Well, yeah, that's why your stop's probably here. And that is how it works. Okay? And your next opportunity is going to be 2 standard deviations from the mean, and you're going to do a reversion that way. New trader says, any chance of a break of a head and shoulders? Well, of course. Yeah, that's what you're looking at. So what you do to do that is you say, you measure the top to the neckline. So let's make the neckline here. Okay. Make it, it's about there. Okay, good. And then you move this to the neckline, and there's your target, which is not far off the target I gave you earlier. Okay, and it's not far off this resistance, right? If we straighten this up a little bit, it's pretty close into there. So if you believe in that head and shoulders, you should have sold it like, oh my God, what was this? Yeah, I guess yesterday. Like, look at this. 4 hours, 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 4 hours ago. Like, oh my God, right? Like, should have sold that, wow, a long time ago. So right now, bears are pretty happy. They're loving it. They're probably jamming their stops. Bulls are nervous. They're not happy at all. But like, should you be trading now? No. And that's the problem, right? By the time you see it, it's already happened, so there's nothing to do. This is why you have to plan in advance. I hope you spent an hour yesterday working on today's trade plans. Okay? It's probably the win rate, probably 12%. Are you okay with that, June? By the way, what the hell is June 12th, 1776? Is that Bunker Hill? Daniel, apparently you need to read my book because I dedicate a chapter to that. What is that? Bunker Hill? That would have been pretty close. It's... Anyways, I'll have to look that up. Oh, the Bill of Rights. Okay, that's cool. No, they're not, Kemi. Wow, look at that. Hope knew that. Like, boom. Hope. Anyways, cool. Great. So let's do another random one. What's going on here? Okay. Daily charts. Okay. So what do we know? Bottom, 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 bottom. Okay. We also know where bears are going to sell. It's more of a zone. It's more of a zone. It's sort of in here. You could probably argue to be a little more conservative. If I can grab it. Come on, MT4. So there's our range. Right on, Kemi. Appreciate that. Hey, would you also, would you guys leave testimonials or book reviews on Amazon? It's still flooded with reviews, some of which are by people that never actually purchased the book, which is funny. But it's still got a lot of reviews of it being the absolute worst book ever written about any subject in the history of the world. It's not even the worst Forex book written. It's the worst book ever written, which is, you know, not surprising since it's the first book I ever wrote. Okay? All right. All right. So anyways, cool. So now you can drill in there, but do you understand you you should already know if you're a buyer of this or a seller at this. And what we've just discerned is the price of which you would buy or sell. Oh, lots of people hold grudges against me. Okay. Yeah. Oh, sure. Yeah, absolutely. Oh, thank you guys. I mean, honestly, I appreciate it. And I still have carpal tunnel from writing it. Okay, so let's go into a small time frame. Okay. Well, my next books are going to be very interesting. For sure. I've learned a few things in the last 15 years, but the funny thing is it's not what I would write about. So the stuff I'm likely to write about is the stuff I was doing before Forex, tweaked for Forex. Okay. Yeah, I don't set the prices, dude. Anyways. Cool. Well, make sure you write it down. Like, document that on Amazon.com. I'd appreciate that. That'd be great. Oh, SK, it's going to be a while yet. Okay. Oh, I was a venture capitalist and a Silicon Valley entrepreneur. And before that, I spent many years in the nonprofit world. That's how I sat on, the board with George Soros. He sat on the board because it was a nonprofit, and I was a director in the company. So, yeah, yep. And before that, I worked at NASA and Cisco Systems and Apple Computer. All those little companies. Cool. So, what do you think about this? You should already know if you're a bull. You should already know if you're a bear. What do you guys want me to be looking at this? What do you want to be? Oh, yeah, that's right. Sorry, Shug. Superman. Yeah. Javier, the interesting part of that is I'll probably do something like that, but for legitimization, I'll probably teach a course at Harvard. I'm seriously thinking about doing that in the next couple of years. I don't want to do it if professors have to do it online. Like, I want to go to Harvard, stand in a Harvard classroom in a legitimate Harvard building. Legitimate being, I mean, the science hall is ugly, but I like the auditoriums. Um, the GSE, I don't. It's too modern, but like Seaver Hall, for example, it's really old. Harvard Hall, that's another. I want to be in a legitimate Harvard classroom and teach, even if it's just once, and have a textbook and all that, and then, boom, move on and teach it myself, obviously. All right. Bull, 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 bull. All right. So step one for this. By the way, bull. Anyone that said bull is choosing short term over long term. Okay. So let me change the indicator first of all from bearish to bullish to represent bulls. Oops. Bearish, bullish. Bullish mode. Okay. So let me highlight the thing I was just talking about. The long term says this. Okay. And the short term says this. So anyone that's a bull is choosing short term over long term. Just so you know that. Now they might say, well, Wayne, I'm looking at this, so that's longer term. Well, maybe, because if you look at this line now, that's the longer term mean. And this is one standard deviation from the mean. Okay? So then I would argue still, even in the longer term, going back to 2 weeks ago, this is still more down than up, which is a risk off mode, but up is risk on. And so anyways, this is for you to make your decisions. Okay? And I want you to say you're a bull even though it's not a bullish market, because all it doesn't change your direction of trading. It changes your aggressiveness, meaning how quickly you enter your trades, how quickly you move your stops, how far your stops are, how many pips you expect before you take profit. All of this gets tempered by being a bull in a bearish market, but it doesn't mean you can't. So what we have here is down consolidation, right? More consolidation. And a bull is probably thinking like this. Okay? It's going to take several days, and we certainly got risk. I mean, look at that top. We got some pretty big risk there. But it would be a slow and steady climb. Okay? Now, the downturn is easy. Okay? The downturn's easy. We're not set for it yet, but here's what it is. That's it. Okay? Up, 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 up. Let's make this a little thicker. Okay? Up, 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 up. Down, down. Double top. Lower low. Lower high. Lower low. Lower high. And down back to the mean average. And the mean is still down here. To the future mean. So back to 60. Okay, that's the easiest one. The more difficult one, and it's more difficult because you're buying dips in a downtrend. But here's today's trade plan. Which means, but if we get that, then the next move is going to be sort of like this. If you're a bear, you're going to start looking for double tops, and the bulls are going to try that tomorrow. Tomorrow! Okay? And that's what should be happening. Okay? And if you were a bull, this is what you were doing. This is what you planned yesterday. So 24 hours ago, you would have said, yeah, I think I'm going to buy it at the London Open as long as it doesn't make a lower low. That's it. Okay. Rafa says, Wayne, you said long term this is going down. Is it your bias or no? I didn't say that. I said it is. Not that I think. Okay? This is statistical analysis. It doesn't represent my opinion. It's factual. Okay? Okay, you see? So I think it's Rafa, right? See, Rafa? And that's it. Like, it's not my opinion. It's not my bias. It's just factual. Okay? So now, factually, you should adjust your trading to market conditions. Okay? So if you were a bear, you're looking for a lower high, lower low. That's it. Easy. Done. Don't make it so complicated. Okay? And for that, you would go back to our setup. So you go back to the indicators and you would adjust it to bearish mode, not bullish mode. The reason I like this indicator is I force you to make a decision, because I still think many of you look to your indicators to make decisions for you. And you are depriving yourself of your destiny, because that's a fool's errand. Okay? Because if your indicators are going to tell you what to do, nobody needs you to be a Forex trader. There's enough Forex traders in the world that can set it and forget it and let their algorithms do all the work for them. If it was that easy to just simply turn on your algo and print money, then we don't need you. Because the indicator will make the decision. So why would somebody pay you if you could, like, if your lawnmower would mow the lawn for you, then why would you pay someone else to mow the lawn? Agree, Sav Sav. Sav Sav says statistics is a science. It doesn't mean that the next move will be up or down. Exactly correct. I 100% agree with you. That's why you must filter all this data with your opinion. And you could say statistically this may not be a good price. Okay? But it doesn't mean it's a good price or not. Okay? It's part of your analysis. So, like, for example, if you are a bear, this is clearly, absolutely, and by the way, you knew this yesterday, this is your sell zone. Okay? And also, you almost certainly traded that. Almost certainly. Okay? You sold at 65. Like, what else would you be doing? I don't get it, right? If you're doing something else, I don't get it. Like, what is it that you're doing? Right? I mean, look, psych level, 65. We can get rid of this one. So, you know, you can see trading is as complicated as people saying, sell it at the psych level of 65. Done. But they were a bear, so you have to understand they were bears up here. They got their lower low. They sold the lower high at the psych level, and they're expecting a lower low. They're not even doing anything today. This is late. Doing a trade today on this is late. You're very, very, very late. And that should be the part that scares you. Bulls bought it yesterday, and you'll see statistically, or let's say based on pivots, okay, that was yesterday's buy zone. Very cool. So here's where bears sold. They got the lower low. So here's where you look left. You take the lowest low previously and you drag it across. And this is a projection of where your next trade will be. And that's called a role reversal. What used to be support will become resistance. Throw in a psych level for good measure. Done. Forex Trading 101. Okay? Now we're in this consolidation mode. And the way you try to figure out what's going on is through the filter of your bias. So a bear's like, yeah, I already sold this, so I'm cool. But if I want to add a second one, I would do this retest. And this is bears adding a second trade, or actually a third trade. Bears may have sold this. They definitely sold this. And this isn't really a good trade. It's just a little day trade. So they're like, well, I'm already in the swing. Okay? But I'll pick up a day trade, make a few extra pips. It's just an add-on to an already designed plan from 2 weeks ago. Okay? Do you remember when I went to the beach? I took a week off. Why? Because the uptrend that we had talked about and planned weeks in advance hit all our targets with the velocity of which was discussed in the plan. We hit our targets. I'm like, I'm out. Going to the beach for a week. Smell you later. Okay? Look, the uptrend is over. So took about 3 days, but the bears finally got their shot. Now they got their lower low. lower high, and they're expecting a lower low. Now, do we know if they're going to get a lower low? No, but we know they put money here and we know they put money here. So we know what they're expecting. Okay? So like let's let me back out a little bit, okay? If bears do actually trade this, then you're going to get a lower low, lower high, lower low again. So this is next week's trade. And it will sell a rally up on 64. Okay? Pretty cool, right? So let me change this now and also show you the impact of planning. Oops, not template. I want to go indicator. So I'm going to change nothing now except our point of view. It's the same pair. I'm not even changing the chart. Nothing's different. Okay. Okay, you ready for this? This is the weekly swing trade plan. And this is the target. This is what I'm saying, like, you would have sold it here and you're done for the entire week. Right now is maybe a little follow-on, little pissy little day trade, right? Right? So what that means is like 4 candles down, 2 candles up, 4 candles down, 2 candles up, 4 candles down, 2 candles up. Take profit on Friday, done. There you go. Why do I say 4 candles down, 2 candles up? Well, down for 16 hours, up for 8 hours, down for 16 hours. And you're like, well, I still don't get it, Wayne. All right. Well, we're planning day trades on 4-hour candles. So you're going to have a red candle. Let's do it this way. You're going to have 3 or 4 red candles, pull back, there's just 1 or 2 green candles, and then 3 or 4 more red candles. And on a daily chart now, you'll have big red, wick, big red, wick, big red on the dailies. And right? And these wicks are the pullbacks, because if these are daily candles now, mostly down creates your red, so 16 hours down. And then, right? And then here's the little pullback into the wick, and then you sell the wick. And then there's a little pullback, and then you sell the wick, and that's how your daily chart's set up. It's called price action. So the only thing I don't know is if bears are actually going to sell it more, or if bulls are going to like challenge this and take it back up. I don't know the future. I just know how to trade. And if I know how to trade, I know how the other traders are going to trade. And that's the power of knowing how to trade, is not what you are going to do, because I can't move the market. So no matter how much money I throw into the market, it doesn't matter. I'm meaningless. I'm nothing but a cork in the river of Forex. But if I can figure out what thousands of other traders are going to do, then I know where to place my trades and ride the current of the river of Forex. Instead of just bobbing around in the slow water on the sides, I need to get into the center of the current and ride this down. And if I'm wrong on making that decision, this is what is going to happen. Let's say down and then up, and I get knocked out at break even. But I had the opportunity. Okay. Okay. So right now it's very binary. It's either going to go up or it's going to go down. Okay. Down on this pair is risk off. Okay. Nice, right? So all you have to do is answer one question. Today, that's the timing and everything. Okay. Well, let's go even farther back. Between now and the end of year, are things going to get better around the world economically, or will things be worse economically around the world? Based on your decision, and you better have facts. You can say you believe this, you believe that, and this other thing is obviously evidence to support all your stuff. Okay, so Don's like, it's going to be worse. COVID-19, the Trump election, a trade war with China. Great. Your decision is as good as mine. We're guessing. But you better be able to justify your guess in ways that anybody can understand. So if you threw those things down like you hate Trump and you think he's going to win, and therefore it's the end of the world. It doesn't make any logical sense, but you hate Trump. Great. So Trump wins and he's going to ruin everything. Great. So that's what you think. Great. There's going to be more COVID-19, more people are going to die. There's going to be a second wave of infections and a second wave of lockdowns. Sweet. That's what you believe. Great. Well, if that were to occur, that would also be risk off. So like you go through these reasons. Nobody knows if it's going to happen, but you believe them. And of course, people are going to invest into you because of your belief and your belief system. Okay? I do think Trump is going to use China as a way to control the election. Okay? So whatever. But that's my belief, but whatever. So you have this belief system, and from that you know what to do. Also, investors know what you do, and they know whether they should invest in you or not because they like you or they hate you. Okay? So very nice. So make sure you know what you want to do, and then from there you carry it out. So let's say you're risk off. You think things are going to get worse. Do you like the fact that on the 4-hour, the large long-term analysis suggests it's still down? Right here to here. And you're like, yeah, I love that. Sweet. Do you have permission to sell? Well, this is a market based on this analysis that you could consider it. Great. Now, to follow that up further, you're risk off. You want this to go down. Do you have general market conditions? Yes. Now, do you have technical conditions? Well, before, when we were here, this was all up. Sure, we're 2 standard deviations from a mean, but that's not enough. You need a reversal pattern. Well, we're still riding a 21 here, so it's incredibly bullish. Uh-oh, what's this? A double top. Well, that could be the beginning of a sign. Holy snap! A lower low off of a double top, which is 2 standard deviations from a mean. Now you're like, oh yeah, Bubba. Oh yeah, game on, risk off. Fire for effect. So now you set up a weekly swing trade and you're like, I'm going to sell a retest of this roll reversal at 65. Boom. That's how complicated your plan is. Now, that's a swing, maybe even a position. So inside of that move, you're going to have weekly swings, you're going to have daily swings, you're going to have session swings, but, right? That's just price action. And now, but the thing is, I say it's just price action. And you're like, Wayne, that's complicated. Well, what I'm saying is your decision-making process is completely done. You know what you want to do, and you believe you have market conditions to do it. And the market conditions here are the market is making lower lows and lower highs. And as long as it's making lower lows and lower highs, you will continue to sell. Why? You're a bear. You don't even have to make decisions anymore. You wake up and you're like, I hope I'm going to sell today. Okay? So this made a lower low. Great. You're going to sell the lower high. There it is. So now, if it makes a lower low, you're going to sell the lower high. There it is. And if it makes a lower low, you're going to sell the lower high. So you got to go, well, we're down here at 62. So now I got to go, So I'm going to sell it, a rally up at 63. Done. Boom. Like, you just keep doing that until technically things change or fundamentally things change. Now, if you miss the fundamental side, the technicals will certainly confirm you missed it and you have to back off. Okay? But the thing is, you have to stack not your trades, but your thought process. Okay? So let's say I'm a hardcore bear, which means I'm hardcore risk off, and it does this. And I'm a bear. Well, I can tell you that this trade would have broken even. Huh. Too bad. So sad. Can't stop crying. It's just so horrible. I'll never get over it. I was in love with that trade. It was the greatest trade ever made. It was, right? No, dude, you broke even, but you're on 9 other trades, so you didn't even notice it. But you busted break even, but you had the opportunity. Remember, I'd like you to have 3,000 opportunities like that. I don't care if 2,000 of them break even. Okay? So you're either right or you're wrong. It's very binary. But if you're looking to your charts to tell you what to do, you're not binary. You're late. If you don't know what you're going to do today until you show up, you don't know how to trade. And you will stay in this short-term mode for years and years and years until you blow out your trading account. You will never become a professional if you have no ability to analyze statistical data, both economic data and technical analysis data on your chart, and make decisions. If you're not a decision maker, you're not a boss, nobody's interested in giving you their money. Why would I give someone my life savings if you don't know what you're going to do with it? Hey, will you take my college savings fund for my children? Will you take my retirement account and invest it? Oh, I'll do that for you. Oh, thank you so much. So what kind of investments will you make? Oh, I won't know. I don't know. I really don't know. I don't know. I'll have to open my chart and take a look. Oh, look at the London breakout strategy tells me I guess I have to be a bear now. Why? Because it's already happened, so I'm going to throw on a trade 4 hours late. Right? Like, it doesn't make sense to say, I don't know. But I might know it when I see it. And I might be in the trade 12 minutes before I change my mind. Rookie says, can I be a success without fundamental economic analysis? Well, let me change the question. Why would you not want to know fundamental economic analysis? Like, can you be a success? Sure. Yeah. However, if you're going to be professional, the answer is no. Okay? I want to be a race car driver, but I don't want to learn how to drive. Okay? It's like, no, right? Or how about this? I want to be a race car driver. I love going fast. I want to win races. I know because of my birthright, because I feel so strongly about it, because I believe I deserve it, I will be a really good fast race car driver. But do I need to know how to use the brakes? Why would I need the brakes? I want to go fast. So I want to learn how to drive race cars, but I don't want to learn how to brake. You're like, no, you kind of need to know how to brake. Braking's kind of important. Right? Like, it just doesn't make sense to me. I bet you if you went to university for 4 years and got an economics degree, that you would improve it in your fundamental economic outlook. Now, they don't really teach you fundamental analysis, they teach you economics, and then you still have to become it. But I bet you if you went to university for 4 years and got an economics degree, you'd be better, right? So why don't you just do that? Right? It's amazing. If this is going to be your career over the next 30, 40 years, even if it's only 20 years or 10 years, why would you not want to get an economics degree? You're like, hey, I'm a professional Forex trader, so I will do an economics degree part-time, right? But I don't think you need to do that, which is the good news. You might want to take the fundamentals course at FX Bootcamp. There's a good start. Okay? Within the first 6 hours of the training course, you will be managing the balance sheet of a commercial bank. And from there, once you know how to manage the balance sheet at a commercial bank, then I can teach you central banking. Because if you don't understand banking, how would you understand central banking? The bank for the bank for banks, right? So yeah, I mean, I'd start there. But you would be laughed out of any room as a professional if you're like, yeah, I don't do any fundamental analysis. I don't believe in it. I don't like it. I skip that part. You'd just be laughed at. It's so absurd. Now, there's plenty of people on YouTube that will tell you otherwise. Oh, it's all in the price. No, that's not true. You'd be laughed out of a head. If you went to a job interview at a hedge fund, they would laugh at you. If you went to a job interview at a bank or some other institution that needs you to trade and hedge, and you're like, no, I don't believe in fundamentals. I just literally don't believe in it. You'd be fodder. I mean, it's funny. It's funny. So do you need to know it today? No. But if you want to be a professional and want to be taken serious by other professionals, yeah, it's a basic requirement, right? Because this is what you're going to talk about. You're going to talk about the RBNZ. You're going to talk about the Fed. That's what you're going to talk about. Sitting down with other professional traders, that's what you're going to talk about. And then you're going to say, your opinion on Kiwi is probably going to have to do with the economic conditions in China. It'd be very difficult to separate those conversations. So now you might cite capacity utilization data from Chinese factories. You're probably going to look at the balance of trade data from both China and New Zealand. Like, you would talk about these things. Right? So, right? So, what it should be done, right? Like, you must master technical analysis. And I'm okay with you starting there as far as your journey to becoming a successful Forex trader. You must know how to enter and exit a trade. Okay? You must. And even if you don't like fundamental analysis, maybe even if you don't believe in it, but you want to be a professional one day, you will still have to know it and study it. Because technical analysis doesn't give you much more than what you should do today and tomorrow. Okay, and if you buy something because it's the 2014 support line, again, it's a little silly. Right? It's a little silly. But what you'll need to talk about as far as the future, what are you going to do next week? What are you going to do next month? What are you going to do next year? This is where fundamentals come in. So, we talked yesterday about the stock market being back at all-time highs, which is a suggestion that investors are also already pricing the valuation of stocks based on 2019 earnings. Okay? But you're like, do you think US companies are going to have the same earnings and profitability in 2020 as they did in 2019? Well, you say, well, we had COVID-19, the entire economy shut down, and we went into recession. So economic analysis tells me there's no way 2020 is going to be the same as 19. Well, then investors into the stock market are thinking about the future. So they're thinking by the end of 2021, we will be back at 2019 earnings. And they're investing into the future. So now we know there's a market, right? And we know there's an economy. And we know where money is being put, where it suggests 2021 economic conditions. But we also know this is a bit manipulated by the Fed, right? That the true economy is being repressed by the Fed. So stocks might be overvalued right now simply because there's nowhere else to put your money. And that over the last 12 years, the bond market has collapsed as an asset class and is now demoted into a trading instrument. Okay? So, Bitcoin. It's not a unit of account. It's not a store of value. And it's not a medium of exchange. But you can trade it. It's a trading instrument. Okay? Bonds have gone from a store of value, which it used to be, and an income stream. And now the value of bonds can move up and down and collapse, and the income stream is essentially gone. Certainly not enough to compensate you for risk, right? Like you loan the US government money for 10 years and you're going to get 0.75% per year. Like that's absurd. So the bond market and specifically treasuries are nothing more than trading instruments now. So where else are you going to put your money? Real estate and the stock market. But that's a tricky thing. That's a very tricky thing. Right? That's going to be tricky. So, but whatever, I digress. I think these are interesting things that you will talk with other professional traders about. Okay. Anyways, that's what a bear is going to do, and that's that. It's straightforward. Thank you, Alex. Yeah, thank you. Let's see. Okay. So, as I leave here, I want to make a point. You're supposed to be planning tomorrow right now. So this is what you need to be doing now. Planning out tomorrow. You might drop into an hourly chart for that. You might drop into a half an hour chart. But if you're just trying to figure out today, you've already lost because many of those opportunities have already happened. Okay? Okay? So what do you think? And by the way, it's easier than you think because you can say, well, if I'm a bull, then I know what I need to see today to confirm my bullishness. And therefore, I know based on price action what tomorrow will need to do for me to get in. So let's say I'm a buyer. let's say I'm a bull on this. Okay. There's current lows, and then there's future lows. Right? So if you're a bull, you're identifying a trend and you're buying dips in the trend. So if today ends this way and we're up here at 65.20, then you're probably going to buy tomorrow somewhere around 65 to 64.80. And it would look like this. I just planned out tomorrow if you're a bull. And if you don't see that tomorrow, guess what? Take the rest of the day off. Well, there's a lot of upward pressure, Don. Everybody makes money on the way up. Very few people make money on the way down. And what is the Fed doing? Pushing up the stock market. That's what they do. Okay? That's what they do. So between now and the end of the year, if you believe in technical analysis, you buy dips. Okay? If that's what your opinion is, risk on, stock market's going up, things are going to get better, then here's what you do every single day, or let's say several times a day, for between now and the end of the year. You buy dips if it's making higher highs and higher lows. If it makes a lower low, you stop buying dips. Until what? It makes a new higher high, and then what? You're like, oh, that's cool. I guess I'm going to buy dips. Okay. There's nowhere else to put your money, June 12th. Remember, so one of the things we talked about yesterday is the old school wealth manager would buy 60% of equities with your money and 40% of bonds with your money. Why? Well, if you bought the bond market, you were guaranteed to make, let's say, 6% a year. Guaranteed. So you're like, yeah, well, 40% of the money should go into an income stream of 8% or 6%. See, it's 6% every 10 years your money doubles. So you're like, okay, that's cool. So here's the math. They're like, okay, you start saving money, and let's say it's fixed, whatever. You retire, right? You retire early at 50. And you got $1 million that you're going to buy in bonds, and the rest is going to go into stocks. So at the end, so by the time you're 60, you'll have $2 million locked in the bonds. Okay? And by the time you're 70, you'll have $4 million in bonds. Assuming there's compounding, right? So you got to reinvest this stream. Cool. Meanwhile, the stock market's going up like crazy, but it also can come down like crazy. But at least you got this guaranteed base. And that was really good for fund managers or wealth managers because that lowered the volatility in the overall portfolio. But right now you're guaranteed zero. So now you're like, well, I guess I'm just going to put everything into the stock market. Well, there you go. I'll look into that, Lungster. I didn't see that option somewhere, but I'll look into it. That's right, Daniel. If you know it's going up, then you buy dips. You got it. Prince Philip, very easy. If Americans are filthy, stinking rich, they buy stuff from all around the world. Because if all Americans are rich, you wouldn't hire an American to do something. They're too expensive. Okay? So if Americans are filthy, stinking rich, they're buying Ferraris and Mercedes. They're buying OLED LG TVs, so on and so forth. And US dollars leave America and they go into the world, which increases the supply of US dollars. And when the supply goes up, the value goes down. Now, when Americans suddenly feel poor, and this is the household effect, if you think you might lose your job in the future, that's enough. You stop spending. So you can think about it as you're not sending money abroad, and if you're a corporation, you were going to make a big investment and you moved money, and all of a sudden you're not going to make the big investment because some sort of risk hit us. You're like, that deal's off. Cancel the contract, deal's off, I'm bringing the money home. Okay? So Americans are rich, the dollar gets weak. The Americans are poor, the dollar gets strong. Well, it's actually, Daniel gets it right, but the truth of the dollar getting strong. So let's put it a couple of different ways. Like I said, when Americans feel filthy, stinking rich, they buy a bunch of stuff from other countries. That weakens the US dollar because they're sending dollars to foreign countries and receiving in exchange for that money TVs and cars and all that kind of stuff and cell phones, right? Okay? So if I'm buying a Toyota, I send the money to Japan, and in exchange for that, I get a car. So I have less dollars, but I have more cars. And that, right? So that money now is in the foreign exchange market. Okay? Cool. Now, when things are bad globally, foreigners put their money in the United States economy. It's the largest economy in the world, but it's also the reserve currency. Okay? Okay. So imagine now, foreigners are freaking out. They're like, oh my God, everything's collapsing. They put their money into the United States. And they demand dollars because to put it in the United States, they need US dollars. So maybe they're buying treasuries. Look, at least the United States government is going to guarantee it. If you put $1 million in, you'll get $1 million back. Now, you're not going to earn any income or almost no income, but you're not concerned about that. Okay? So think of it the other way. When the global macroeconomics are bad, foreigners buy up all those dollars that are floating around in the foreign exchange market when things are good. They buy all those dollars, and then with those dollars, they buy government debt. They buy treasuries. They buy the 10-year T-note. Okay? So think of it that way. When things are good, money leaves America so that they can get stuff. And Americans love stuff. And the less money you have, the more stuff you have. Okay? Rich people live in museums. They have hardly any stuff. Why? They invested all of their money into income-producing assets. They don't have any money. Money sucks. They don't have money, they have assets. Okay? Anyways. And then when things are bad, those dollars get bought up because foreigners are now buying stuff from America, like U.S. treasuries. Okay? Au revoir. A plus. So anyway, so hopefully, Prince, that helps. Motown Philly. All right, guys. Got to jump. Just one thing, maybe watch testimony from Powell. Okay, usually it's the same testimony or the same speech, and then Q&A gets interesting. Remember to do your homework as far as reading central banking reports that came out this week. And remember, if you're in my live trading group, I'm looking for presentations tomorrow. You're going to explain what was said in those meetings. Okay. Thank you, guys. I hope you appreciate that I'm not putting you into trades, because that's so silly. But I'm teaching you how to trade. I'm teaching you how to think. I'm teaching you how to plan. I'm teaching you how to take control of your behavior. You can't control the market, but you can control your behavior. Okay? And I really honestly believe you can do this. Thank you, guys. Thank you for being on my team, and thank you for putting so much effort into getting this right. So peace on earth. May the pips be with you. May your profits be above average. And make sure you visit Trader's Way. Open up a demo account. Okay? Open up a demo account like today. Show them that this matters. And please leave a like, leave a comment, and leave a thumbs up on YouTube. And tell YouTube this is quality content. And if you read my book, if you left a positive review on Amazon.com, that would be wonderful as well. So thank you for all you do. Cheers.